Hello and welcome everyone to Gold Asset of the Day for the 17th of February 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? At the start of the week, as we mentioned to you on last week's Gold and Silver Asset of the Day, be aware that on Monday it is a US public holiday, and we still have the US public holidays in China as well over this week. So with thinner liquidity, expect exaggerated moves in the market. That's exactly, in fact, what we've seen here on Tuesdays. We've seen gold, silver prices break down earlier on in the session, gold breaking back below $1,800, silver prices as well breaking back down towards $27 per ounce. Now I'll come on to that in a moment. I just wanted to highlight the fact that we went through that in detail with you last week, the potential for exaggerated moves where you've got thinner liquidity in the market. Note it down certainly for future reference. When you do tend to have these public holidays, this is where during thinner liquidity you can see sell-offs. Now coming back to a point we mentioned on the week ahead commodity report, we have seen more evidence this week again of the commodity supercycle we are transitioning into. Platinum prices, they broke out on Monday to 6.5-year highs. Copper prices broke out to 8-year highs. We've also seen energies break out to 13-month highs. In fact, on Monday, we banked over 1,000 points on our energy positions. That's, of course, for every one lot that you would trade, $10,000 of profit. For every 10 lots that you would be trading, $100,000 of profit. So we've seen a big move at the start of the week across energies. Palladium also has been a tremendous move for us. We've got 2 new positions which are up currently over 3,000 points, but over 4 trades we've got 8,000 points of profit over 4 positions at the moment. Fantastic market. And as you know, we've been highlighting this week in and week out on the commodity report for you to take advantage of the super cycle that we're transitioning into. But like any bull market, we're not going to see commodities go up in a straight line. They will zigzag. And this is where you want to take profit off the table on the breakouts here and then reload on the pullback. So we're essentially seeing that at the moment, right, on the metals. You need to be banking profits regularly. We mentioned last week to you that we banked 800 points on gold at the swing highs. Then we waited for pullbacks later in the week, at the beginning of this week as well, in order to start reloading on positions. As I've mentioned so many times before, it's a trader's market. It's not a buy and hold market. You need to keep taking profits off the table. Then when you get the large sell-offs that we've seen over the last 24 hours for gold, for silver, it enables you to buy back at much lower prices. And this is really the trick at the moment with the metals complex. You want to take advantage of this range-bound price action. Now, as we progress throughout this week, of course, on Wednesday, we have the minutes of the FOMC. So that, again, can be a catalyst for big moves. And we also have European Central Bank minutes as well. So both of these news items can certainly cause big moves in the metals. And we also have contract settlement next week as well on Wednesday the 24th, which again, you can see big exaggerated moves in the metals markets that you want to be taking advantage of. We have had a corrective price action over the last week. We broke out to $1,852 per ounce. We've been waiting patiently for more significant pullbacks, which enables you again to buy back at much lower entries. But the trick is, again, not FOMOing in and not panic selling out at the lows as well. So that's just a point to bear in mind right now. With the metals, we do see these pullbacks, corrective price action, typically around public holidays. It's exactly as we stated on the week ahead commodity report. And now we have some major news items which are coming up over the next 24 hours. And of course, we've still got the stimulus, which is to be passed in the USA. So again, it's a trader's market at the moment. It is not a buy and hold market. If you're constantly finding yourself panic selling out the lows, it's likely that you're just using outdated technical analysis or just gimmicky indicators that just won't work in these market conditions. You want to have an edge in these markets where you want to be utilizing a research-driven approach to trade the same way that the professionals do, the banks, institutions, the hedge funds, making sure that you're aware of capital flows in the market, awareness of what the banks, institutions, hedge funds and money managers are doing in real time. Alongside that, you want to marry that up with daily, weekly, monthly cycles, seasonal plays, intermarket correlations, the macroeconomics, ratios in the market, sentiment, and key levels of liquidity, which are just as important for banking your profits as for entering trades as well. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.